Welcome to our series of educational videos on technical analysis. This is part 3, Candlestick Reversals. I'm Michael Gable, Managing Director of Fairmont Equities. Please ensure you are familiar with our disclaimer in that any advice is general advice only. The first part was an introduction to technical analysis, and in part 2 we looked at charting patterns. In this part, I'll go through some common candlestick reversals with some practical examples. Later on, we'll go through indicators, Elliott wave, and then finally how we combine both technical and fundamental analysis. For those not familiar with us, Fairmont Equities is a share advisory firm helping clients achieve higher returns from their share portfolios by combining both fundamental and technical analysis. You may have seen some of our commentary in the specialist media, such as the Financial Review, and I regularly provide commentary on the Sky News Business Channel and CNBC. As we saw in part 1, candlestick charts can be very useful, and they can be particularly useful in looking for reversals in markets. That is, determining whether an uptrend or a downtrend is about to end. The key point is that the stock needs to be trending already. If the market is choppy and there's no clear trend, then these reversals are not as powerful. Apart from the stock trending in the lead up, the other point to note is that we need to see confirmation afterwards. This means that once we've seen, for example, a reversal at the end of an uptrend, if the stock quickly goes on to make a new high, then it's not a confirmation and therefore it negates that original reversal signal. But we'll see this in practice shortly. There are many candlestick reversals, but we'll look at some of the common ones. They are the shooting star, the hammer, the bearish and the bullish engulfing patterns, a piercing pattern, and 3 black crows. The shooting star is where we can see a stock trending up for a while, and then it gaps up and creates a candle where there's a lot of price rejection. So in this particular example, we could see a nice movement up here in this particular stock. This is Newcrest Mining, and then we could see the stock gapped up here, and there was a lot of price rejection up at these levels. It even tested down here, but ultimately it finished at around about the same point. So a lot of price indecision, and then after that it gapped down. So the shooting star is not just this one candle, it's actually a combination of these candles. And then in terms of confirmation, we can see that afterwards the share price dropped and it's struggled to go higher. So clearly we've got a reversal in place here. We can also turn this chart upside down and it'll also show us a reversal on the downside as well. Now the hammer reversal occurs at the bottom of a particular trend, and in this case we've had the share price of Bellamy's at this stage go from $16 all the way down to $10, and this is the hammer here. So this particular candle is called a hammer. It's got a very long shadow down here, but ultimately the share price finished at its high for that time period, and this is a weekly chart. So a lot of price rejection here under $10, and we can see in terms of confirmation the fact that afterwards the share price managed to stay up at these levels. So it didn't go anywhere back down here, it managed to hold on up at these levels. So this is telling us, okay, we've got a reversal here, the downtrend leading up to it is now over, and the stock is likely to head higher again. The bearish engulfing pattern can be quite powerful, and here you can see why. So we've had a stock trending up for a while, and then we get to a point here where it gaps up again, maybe even tries to trade a little bit higher, but ultimately it sees sustaining selling pressure throughout the period and closes well down. And it's called an engulfing pattern because you can see that this dark candle completely engulfs this white candle here. And in terms of confirmation, we can see that after this candle was formed, we've had a few, this is a weekly chart, we've had a couple of I guess, poor weeks of price action. The share price wasn't able to quickly trade back up at these levels, so this is telling us that we've most likely got a top in place, and we can see that the share price just fell away. The bullish engulfing pattern is basically the opposite of the bearish, of course. In this case, we could see a stock trending down. This is a monthly chart of NAB during the GFC, so obviously it shed more than half its value. And then we get to a stage here where the stock opened lower, but ultimately by the end of that period it was trading higher, and in this case the white candle is completely engulfing the one before it. Now the piercing pattern is very similar to the bullish engulfing pattern, but it just doesn't finish as high up. So what we're looking at here is a stock that had been trending down for a while, and then at this point here it opened lower, starting to trade lower, but by the end of the week on this weekly chart we could see that it got all the way back into the range of the previous candle. So this dark candle is the previous candle, and the piercing patterns back into the range. For a few weeks after that we could see that the share price didn't fall away, it actually stayed quite elevated, and that gives us confidence that we have seen a low and we can enter the trade. Now the three black crows consists of three dark candles where each one opens in the previous range but then closes lower. So what I'm looking at on this chart is this series of three candles here. So I guess a negative week there. Stock tried to open up higher, closed lower again, and did the same thing. So basically 3 times in a row, quite a negative sign, and we could see the struggle on the share price to go anywhere at this point, and obviously it was just a matter of time until the share price fell away. That's the end of part 3. In part 4, I'll look at how you can effectively use indicators on your charts. If you're not viewing this video on the Fairmont Equities website, be sure to pay us a visit where you can subscribe to our research and see our real stock picks in action. There's also a free blog page that gets updated regularly with my articles and videos.